Hello, viewers. Welcome to my channel once again. If you are new, please do subscribe to my channel and hit the like button. If you have any comment, anything you want to share with me, or rather something you want us to discuss about as regarding trading, forex trading, please do share with me so that we can both trash it out. Or maybe if you're having some difficulties, drop a comment or do email me so that we can have a one-on-one conversation. All right. And do share my videos. All right. Because that is the only thing you can do to encourage me. All right. Without further wasting time, today, as at the time I'm recording this video, is 25th of August, year 2024. And today, I'm going to be diving deep into what I titled the topic of today, understanding different market structure. Understanding different market structure. In forex trading, understanding different market structure is very, very crucial because this is what you are going to use to make informed decision when you want to trade. At this point, let us explore some key structure because all these things are the basics, and these things are what you need to deal with all through the process, in the process of your journey as a trader. You must learn how to read structure. You must know when we are in a trending market. You must know when a market is in a consolidating state. You must know when a market is ranging. You must know when there is a breakout after a period of consolidation. You must know when there is a downtrend. You must also know when there is an uptrend. All those things are basics and also advanced because you cannot do without these things. If you fail to understand these things, structure, these things called structure, you are just going to be doing try your luck. All right. And another point is for you to be able to do a top down analysis, knowing the major structure, you know the minor structure. All right. Now, I want to just give you guys some info. Anytime you see a move, anytime you see a move, all right, let's say for example, if there is a bullish trend, all right, an uptrend, all right, when you see an uptrend, you see a major move. For example, let me just show us this thing here fast. Anytime you see a major move like this, you see a major move. This is what I call major move, all right? From here up to this point, up to this point. This is the major structure move, all right? If you get into this trade, you will ride it up to this point. Now, when a trend is having a pullback, that is the minor structure we are talking about. Regardless of time frame, I'm not talking about time frame now. For you to get the concept right, anytime that there is a major push, that is a major structure, the higher time frame performing its duty. That is when the lower time frame aligns with the higher time frame, and you see that there is a major push. If you are an advanced trader, those are the movements that you need to capitalize on. Those are the movements that you need to capitalize on. All right. Now, do you know why we scale down to make an entry? We scale down to make an entry because in higher time frame there are small opportunities. All right, those small opportunities, because when if you open a daily time frame, for example, you always see a big candle. Anytime there's a push, it will go up. Anytime there's a retracement, the same candle will start coming down a little. And once it's done retracing, it will start pushing again. It's going up. All right. If the candle is a bearish candle, when you see the candle will be coming down. All right. And when it's making a retracement, the same candle will still be going up. So where do you want to put your entry and your stop loss? It's not possible. That is the reason why we scale down to the lower time frame to make our that is why we scale down to the lower time frame to make our entry. All right. Now, what am I trying to say? Now, the thing is, the major structure move after the pullback. All right, you see the major structure if it's in a bullish state, that time it wants to start pushing to become bullish again. All right, that is where you see the major move. That time, the smaller structure we align, the smaller time frame would have aligned, would have, okay, that time is making a pushback. That is when you see the minor structure will be having a bullish time, at the same time having a pullback. All right, it will the minor structure will rigmarole up to a point. It will become bullish, at the same time bearish, when it's now time for the higher time frame to make that push. That time it would have rhymed with it. But for the time it rhymes with it, you see when you open the minor structure, you see that it's in a push phase. You open the major structure, you see that it's in a. You open the higher time frame, you see that it's in a push phase. You open the lower time frame, you see that it's in a push phase. Once it aligns, that is the highest opportunity in trading. Those are the movements you need to always capitalize on. I am not saying that you cannot trade the lower time frame and anytime it's having an up a push, because each push will end here. You take your profit, allow it to come down. When it's having a push again, you see this one. When it gets here, there is a resistance here. It will come down. All right. By the time the major push will want to take effect, it will now align. So, guys, it's very easy. Trade with sense, and you need to always know how to read structure. All right, back to topic of today. All right, we have the trend. All right, from the trend we have an uptrend. All right, an uptrend is when price move higher over time. We say uptrend when price move higher over time, within a period of time, when there is an increase in price. All right. Now, what are the characteristics of an uptrend? We have the higher highs and the higher lows. All right, that is the character of an uptrend. We have the higher highs and the higher low. All right, we have we have the higher highs, the higher low. The higher highs, the higher low. All right? That is the character of an uptrend. Anytime you see a character like this, you know that it's an uptrend. All right. So it's very clear and simple. All right. So when you see uh, an uptrend like that, what do you do? All right. When it makes a high, all right, you wait for it to retrace. Once it retrace, this is your entry to join the movement up. All right. Once it gets here, you take your profit, you come down again. All right. To wait for it. Like I told us, this is point A, this is point B. Bring out your fib, wait for a retracement. Enter from here, you take your profit at the next resistance level. The same thing apply when it's a downtrend. All right. It's very simple because we have so many to deal with. I have to, because of time, I need to, speed up a little. So the character of an uptrend is when you see a trend making high highs and a higher lows. So what does that mean if a trend is an uptrend? That means that there is a price movement, a higher price movement over time. Prices move in a higher over time. All right. Price move higher over time. All right. There is an increase in price within a period of time. So the character is higher highs and higher low. Then we know another one is a downtrend. All right. The downtrend is prices move lower over time. That is when you see lower highs and the lower lows. That defines uh, a a downtrend. All right. We have like this lower low. We have like this, for example, lower low, lower highs. All right. One moment. Lower lows, then a lower high. All right. Sorry, guys, because you have to bear with me. We have a lower low, then a lower high. A lower low, then a lower high. A lower low, then a lower high. All right. A lower low, then a lower high. All right. We have the push phase and the corrective phase. The push phase and the corrective phase. That is what denotes uh, a downtrend. Then we have range, a range market that is sideways, or we call it consolidation. Price move within a defined range. It's not going anywhere. It just go up, it goes down. It goes up, it goes down. It moves within a defined range. Traders often look for support and resistance level to trade within this range. So if there is, let me see if there is any movement like that for now. It's been a while that we see that kind of, because it's been trending all along. Anyways, it's not your, but the thing is that the idea is that price will remain like this. For example, price will stall like this and like this. You see price will not go above it. It will go up like this, it will come down. It will go up, it will come down. It will just be moving within this range. And anytime you see price breaks out of this range, you will now see that, okay, this has broken out of the range. And that is a very high opportunity as a trader, for you to trade once you see a breakout from that range. All right. So what we are saying is that a sideways or a consolidation market, that is when price move within a defined range. All right. Then traders, what will traders do? They often look for a support, or that is the downside, and a resistance level, that is the upper side, to trade within this range. All right, like I told us, price will just be like this and like this. Price will be from here to this point. Price will be moving from here up, or down, up. So when you want to enter, place an entry, enter from the top, take your profit from the down. Enter from the down, take your profit from the upper side. Don't ever enter from the middle. So that is how it is, guys. It's very simple. Now we have reversal pattern. All right. We have the double top, double bottom. All right. A reversal pattern where price form two peaks, where prices form two peaks. All right. Double top or two troughs, double bottom at approximately the same level. It signals a potential trend reversal. So, guys, let me just show you quickly. We have something like this, something like this, something like this. All right, then you now see price will come down. This is double top. All right, price will come, hit this level, come down a little, retest it again, then before it move. Now, to make it very simple for you guys, I want you guys to understand something. All these things, if you know what structure is all about, this is what we simply call uh, when price gets to this level of resistance. Well, let's say for example, if you are doing your top down analysis and you mark a level where there is a weekly level, daily level, 4 hour level, or monthly level, once it gets to that point, price will get to that point, return from, once it hit that level, all right, the level of resistance, it will come down, then retest that same place before it push out. So you can call it header, you can call it double tops, we can call it, we can still call it something that it will break and retest it. All right. Let's say there is a resistance here, price breaks through it. All right. It now comes back again to retest that same place before it starts to move. All right. And we still have what we call we still head and shoulder. All right. All this in head and shoulder. You see uh three movement like this here, like this, before price will now start coming down. All right, before price will now start coming down. This is the head, this is the shoulder, this is the shoulder. So it's a very simple thing, guys. Something that we need to know. It's a very simple thing for us to understand. All right, all those things, once you know how to restructure, they are very simple. Then another thing is inverse head and shoulders. A bullish reversal pattern with three trucks, the inverse of the head and shoulders pattern, like I just drew to just show us now. All right. Continuation pattern flag a short-term consolidation after a strong price movement. All right. That is flag. All right. A short-term consolidation after a strong price movement. Flags are usually continuation pattern. You just see something like this, all right? After the trend has moved upward, you now see a trend, you now see formation like this. It will now go up like this, all right. The next thing you need to do is wait for it to break below this place. Once it breaks below this place, you place your entry. All right. You wait because once it's going like this, the next target you should be the next thing you should be targeting is for it to break below. It must come down. It's going up. This is a flag. The next thing you say is for it to start coming down. So once it breaks below this red line, then you place your entry. Put your stop loss at the top of this place and short the market. So guys, it's very simple like this. I will stop here, then I will make a continuation video because of time. Thank you so much and God bless you. Subscribe and drop your comment